The Trader's Companion: Unlocking Success Through a Trading Journal. Introduction to Trading Journals. In the world of financial markets, where every decision can make or break fortunes, traders often find themselves navigating through a sea of uncertainties. Amidst the chaos of market fluctuations and emotional rollercoasters, there exists a beacon of stability and clarity: the trading journal. A trading journal is more than just a record-keeping tool. It is a trader's most trusted companion, a repository of insights, lessons, and invaluable experiences. In this comprehensive guide, we delve deep into the importance of maintaining a trading journal and how it serves as a cornerstone for measuring productivity and efficiency in profits. Understanding the purpose of a trading journal. At its core, a trading journal is a personalized diary where traders document every aspect of their trading journey. From entry and exit points to trade rationale, emotions, and market analysis, a trading journal captures the intricacies of each trade, providing a holistic view of one's trading activity. The primary purpose of a trading journal is twofold: to facilitate self-reflection and to provide a data-driven approach to decision-making. By meticulously recording every trade, traders gain valuable insights into their strengths, weaknesses, and areas for improvement. Moreover, a trading journal serves as a historical record, allowing traders to track their progress over time and identify patterns in their trading behavior. The components of a trading journal. A well-structured trading journal comprises several key components, each serving a specific purpose in the trader's journey towards success. Trade details. This section includes basic information such as the date, time, and instrument traded, as well as the entry and exit prices. Trade rationale. Here, traders articulate the reasons behind each trade, including technical and fundamental analysis, market sentiment, and any other relevant factors influencing their decision-making process. Emotional state. Emotions play a significant role in trading decisions, often clouding judgment and leading to impulsive actions. In this section, traders reflect on their emotional state before, during, and after each trade, allowing them to identify patterns and develop strategies for emotional management. Trade management. This component focuses on the management of each trade, including stop-loss and take-profit levels, position sizing, and any adjustments made to the trade plan. Post-trade analysis. After the trade is closed, traders conduct a comprehensive analysis to evaluate its outcome objectively. This includes assessing the effectiveness of the trade plan, identifying areas for improvement, and extracting key learnings for future trades. Benefits of maintaining a trading journal. The benefits of maintaining a trading journal are manifold, extending beyond mere record keeping to encompass personal growth, improved decision-making, and enhanced profitability. Self-awareness. By documenting their thoughts, emotions, and actions, traders develop a deeper understanding of themselves and their trading psychology. This self-awareness enables them to recognize and address cognitive biases, overcome emotional hurdles, and cultivate a mindset conducive to success. Continuous learning. A trading journal serves as a repository of lessons learned, allowing traders to leverage their past experiences to inform future decisions. Through ongoing self-reflection and post-trade analysis, traders refine their strategies, fine-tune their approach, and evolve as traders. Accountability. Keeping a trading journal holds traders accountable for their actions, fostering discipline and consistency in their trading practices. By setting clear goals, adhering to predefined rules, and evaluating their performance objectively, traders take ownership of their success and empower themselves to achieve their full potential. Performance evaluation. Perhaps the most significant benefit of maintaining a trading journal is its role in measuring productivity and efficiency in profits. By quantifying key performance metrics such as win rate, risk-reward ratio, and average return per trade, traders gain valuable insights into the effectiveness of their trading strategies and the overall profitability of their trading system. Practical tips for maintaining a trading journal. While the benefits of maintaining a trading journal are undeniable, many traders struggle to implement this practice effectively. To maximize the utility of their trading journal, traders can adopt the following practical tips. Be consistent. Consistency is key to reaping the benefits of a trading journal. Set aside dedicated time each day to update your journal, preferably before and after each trading session, to ensure thorough documentation of your trades and insights. Be detail-oriented. Pay attention to the details when recording your trades. Include as much relevant information as possible, such as trade rationale, emotional state, and post-trade analysis, to create a comprehensive record of your trading activity. Be honest. Honesty is essential when maintaining a trading journal. Be candid in documenting your thoughts, emotions, and actions, even if they may be uncomfortable to confront. Remember, the purpose of the journal is not to judge but to learn and grow. Be reflective. Use your trading journal as a tool for self-reflection and continuous improvement. Regularly review your past trades, identify patterns and trends, and extract key learnings to inform your future trading decisions. Be adaptive. As you gain experience and refine your trading strategies, your trading journal should evolve accordingly. Continuously assess the effectiveness of your journaling process and make adjustments as needed to ensure its relevance and utility in your trading journey. Case studies. Real-life examples of trading journals in action. To illustrate the practical application of trading journals, we present a series of case studies featuring real-life traders who have successfully implemented this practice to achieve their trading goals. Case Study 1. Rajesh, a novice trader, struggled with consistency and discipline in his trading. By diligently maintaining a trading journal and reviewing his past trades, Rajesh identified patterns of impulsive behavior and developed strategies to manage his emotions effectively. Over time, his win rate improved, and he achieved greater consistency in his trading results. Case Study 2. Priya, an experienced trader, faced challenges in scaling her trading strategy to larger position sizes. Through meticulous record-keeping and post-trade analysis, Priya identified inefficiencies in her risk management approach and adjusted her position sizing accordingly. As a result, she was able to maximize her profits while minimizing her downside risk. Conclusion. The journey ahead. In conclusion, a trading journal is a powerful tool that empowers traders to measure productivity and efficiency in profits, cultivate self-awareness, and achieve long-term success in the financial markets. By embracing the discipline of journaling and leveraging the insights gained from their trading experiences, traders can navigate the complexities of the market with confidence and clarity, unlocking their full potential as traders. As you embark on your journey towards mastering the art of trading, remember that success is not a destination but a continuous journey of growth and self-discovery. Embrace the process, learn from your experiences, and let your trading journal be your guiding light in the pursuit of excellence. The path ahead may be challenging, but with dedication, perseverance, and the unwavering support of your trading journal, the possibilities are limitless. So, pick up your pen, open your heart, and embark on the adventure of a lifetime. Your trading journal awaits, ready to accompany you every step of the way. Thank you for watching the video. If you like it, then hit the like button and subscribe the channel for more innovative updates.